What's up? Yo. What's up? Alright. Let a couple more people get in here. We'll get it going. Alright. Let's get it. How's everybody day? How's everybody been? Hope you guys all had a good weekend. Hope everyone's day was great. It's only 1:50 for me, so my day's still going. But I hope you had a good weekend. Zay Gilly, what's up, bro? I gotta get in the gym. Need to get in the gym. Alright, before we even look at anything, let's pull up the news. We don't have that many people in here today. What's up, Alexandra? Hi. Liverpool, that's sick. Liverpool's raining, right? UK is very rainy, from what I've heard. 650 over there. Trade a lot of London session. Hi from South Africa. What's up? That's so cool. I love seeing people tune in from different places. We got Liverpool, South Africa. That's so cool. Alright, so we'll see if some more people get in here or not, but we got a little less people today, but it's all good. Not in the last 3 weeks. Nice weather. Awesome. Yeah, it's starting to get that consistent weather outside. It's that time of year where the weather starts to get more consistently nice. Really good time of year where I'm at too. The winters where I am suck, but this time of year is beautiful. Like perfect, because it's not too hot, but it's so nice. So, no news Monday. No news Monday. You guys already know what I'm going to say. And if you don't know what I'm going to say, you haven't been watching the live streams. No news Monday. Accumulation for the weekly profile. Usually going to be suspect of consolidation. This is a day that I'm going to deem more likely than not as low probability. So going into the day, I'm going to have a skepticism around price. Price needs to prove to me that it actually wants to move on a Monday with no news. I need to see gaps. I need to see expansion. I need to see clarity in what price is doing. If I don't get that from Monday, I'm not trading on Monday. I'll gladly take the day off, let it consolidate, and then look for a higher probability setup later in the week. So there's no rush. If price isn't giving me the signatures or the market conditions that have my edge present in them, then I'm not trading, right? I'm not going to force things and chop. If I know I have less of an edge in chop, I'm not going to force myself to trade it. So we'll see how Monday plays out. We have no news at all on Monday, right? So we'll see if we consolidate. What's up, brother? Good evening. Tuesday, we have Australian dollar red folder. For those of you that trade crosses, Australian dollar pairs, could be a good day of volatility for Australian dollar and Canadian dollar. Wednesday, we have pound CPI. So I'm mainly trading things that are correlated to USD, and what I'm seeing is no USD Monday, no USD Tuesday, no USD Wednesday. We don't have USD until Thursday. That's the only red folder for US dollar this week. So could be a lower volatility week. Not a lot of news drivers to, give price energy to move, but we'll have to just see how things print. So every day I'm going to be a bit more skeptical this week and say, all right, price needs to really show willingness to move. Doesn't mean I won't trade a day without news, but price needs to actually show that signature of wanting to expand. So pound Wednesday, if you focus on pound pairs, crosses, that's a good day to trade pound. Euro and pound as well. So Wednesday and Thursday for Euro pound and USD. So these are the higher probability days right here, in my opinion, for Euro pound. Wednesday, Thursday. USD, no news, no news, no news. We have USD red folder on Thursday. Could give us some volatility, and that could roll into Friday even, potentially. So we'll see. But no news on Friday either. So not a lot of USD red folder news this week. I'm going to start with bonds, and then we'll work our way to dollar and keep it pushing. I don't like this song. Alrighty. So, bonds, monthly time frame, extremely bearish. We talked about this last week. Very, very clear draw on liquidity and bias on bonds, in my opinion. Clearly bullish. I mean bearish, sorry. Clearly bearish, not bullish. Let me turn this music down. So bonds are clearly bearish, right? I mean, you could kind of just ask anyone, even people that don't trade, what they think. Do you think this is more likely to go up or down? You can say down, right? They're gonna say down. Monthly, internal to external playing out, looking at that sell side draw, right? So weekly as well, internal to external playing out, looking at this sell side draw. Can I draw? Right? So these sell side liquidity areas are where I'm looking for price to want to reach for. This is my current draw, here and here. We already offered fair value on the weekly, respected the internal. So now I'm looking for price to want to seek external. Very straightforward. Daily levels. Beautiful, beautiful delivery. I love the way that bonds have been delivering. I want you guys to go into your charts and look at bonds to get a feel for what type of delivery is high probability, because this has been a very, very high probability delivery from bonds. Monthly internal stop hunt, right? We offer fair value in the monthly. Then we begin reaching for external. Weekly trades towards internal, offers fair value, respects it. Now we're printing lower. Daily has a beautiful sell model. Right, sell side of the curve. And look at how we trade towards these internal range. And then we reach for external. So what are we doing again? Trading towards internal range and respecting it. So what's our draw? External. Very straightforward. Beautiful delivery. Put it in a picture frame. Take a screenshot. Whatever you got to do. This is high probability price delivery. I really like how bonds have been delivering. Very clear. Very obvious. This is what you're looking for high probability conditions. So looking for it to reach this external on the daily, and then these next sell side targets here. So low hanging fruit is that, then these. Hey, how are you? Are AUD, NZD, or are AUD, USD, and NZD, USD used as SMT with each other? Yes, 100%. So the easiest rule of thumb is Euro and GBP, AUD and NZD. Anything with these you can use for SMT because they're going to be correlated. So AUD, USD, and NZD, USD you can absolutely use as SMT pairs. So I'm assuming you understand SMT. If you haven't watched my video on SMT, it's awesome. I mainly look at these right here for SMT, right? ES and AQ, gold and silver, euro and pound. You can absolutely look at Australian dollar and New Zealand dollar for that. So very clear bearish draw on bonds. Love it. High probability. Love to see that. Now dollar should be trading inversely to bonds. We took this major sell side, right? External. It's order pairing objective. We're now sweeping it and reaching higher. Gun to my head, based on what I'm seeing from bonds, I'm expecting fall through to the downside. I would be looking for bullish dollar. Now, in terms of dollar delivery, it has not been clean. I don't believe that US dollar has been clean. I think it's been tricky. So for those that are trading a lot of majors, probably got a lower strike rate in the last couple of weeks with how dollar hasn't followed through. Not the cleanest delivery on dollar. So, if you had a lower strike rate these last couple of weeks on things like majors, euro and pound, whatever it may be, don't get too down on yourself and just understand that dollar's been more tricky lately. Not the highest probability market conditions. I had a call with a student yesterday. We did a one-on-one, and he was showing me his losses recently, and he's actually on a losing streak. And I told him, the reason you're on a losing streak right now is because you're purely trading majors, and dollar has been doing this. So when dollar is in consolidation and dollar is unclear, when it's not willing to move, your eyes should immediately come off of majors. When dollar isn't willing to move and expand, there's nothing to do with majors. Your eyes come off and you go shift to the next asset. So for me, if the money's not in majors, I'm going to look at metals or indices. This is why intermarket analysis is such an edge. This is why intermarket analysis is key to my model. I've always been a filtering guy. And the reason is we're watching the flow of money. And when one asset class is in consolidation or moving ugly, we can shift our focus to another thing and trade the exact same model. But we're really filtering for the right market conditions and the right clarity in markets. So if you're forcing things within US dollar when it's in a period of consolidation or low probability, you're going to have a lower strike rate. That's just the nature of it. Though I use euro and pound, and now I want to add more pairs, and those two look like to me. So I have no problem with you using AUD and NZD USD for SMT. I will say, if you're a filtering guy, what I just said holds a lot of weight, because you're going to be directly tied to majors, and that can be an issue because when dollar goes into these periods of consolidation or just lacking follow through to one side, you become a bit more, affected and reliant on what dollar's doing when you're just only looking at majors. So you have to be more patient, you have to trade less, you have to pick your shots better. It's just a tougher situation, in my opinion, to just only look at one asset. Now, people make it work. I know people that just purely trade ES and NQ. I'm not going to sit here and say you can't do it, but you need a model that trades the lower time frames more. Because when you have a model that's mainly built off framing higher time frame expansion, it doesn't work as well. So, all right, dollar. Let me walk through this. Monthly external sweep, sell side, major order pairing objective being swept. We have internal on the monthly up here. Could potentially be reaching for that. We have bearish bonds, so that adds to my conviction of retracement, offering fair value in the monthly. Bullish dollar, gun to my head. We have failed to deliver lower from this gap. Look, when we trade into this gap on this wick, ideally you want to see this deliver lower. Right? We respected this gap now. So on this wick, you'd want to see external begin to get reached for in that flip of order flow on the 4 hour. We don't do that. We actually trade above. And once we do that, our only other opportunity to trade lower from here is to hunt that previous candle high and then drop, which we don't do again. So we've now failed to move lower from this internal range liquidity on 3 consecutive weekly candles. Now this is obviously a big wick, but I'm absolutely favoring longs because of our failure to deliver lower from here. I would have wanted to see it do it from the previous candle high or initially on that respect of the internal. I'm favoring longs on dollar, bullish bias. Pair that with my understanding of what bonds are doing. That's kind of how I'm feeling, right? I believe we're just going to consolidate and then eventually push higher. What I'd be looking for personally, for gun in my head, I'm looking longs. Bit of a more tricky bias. If this isn't clear to you, don't beat yourself up. I believe that this is dollar has been tricky and it's not the clearest direction wise, bias wise. Last few weeks I've been trading less, right? And that's the nature of the game. You have to know when to press, the gas, press the pedal, and you have to know when to let off the gas. Because the market conditions are always changing. This is what people fail to understand. People think that, it's super easy to just be a robot or have a robot executing. Well, the reality is the market conditions are always changing. So you need to adapt to the market conditions as well. What have we seen recently with tariffs, with all the stuff going on? A higher volatility market. We've had to adapt to that as traders. So it's not easy, man. That's why trading is so difficult. You can have a model that absolutely prints in one market condition, but once we get into the next quarter or part of the year and things start to change, it might not be doing so hot. And that's just the nature of the game. That's why trading is so difficult. Any chance you can add Euro, Pound, and Australian dollar, New Zealand dollar to the list since we don't view the forex system anymore? Like, you want those 2 crosses? I can add them for now. I don't know if I'll do them every week, but I can add them for now if you want. You're a GBP. Do you have a preference on like the broker feed? I'll just do OANDA. I usually used OANDA in the past when I was trading forex. Here, I'll add them for you. All right. So check NQ and NASDAQ, or ES and NASDAQ. Absolutely. Give me one sec. So yeah, I'm favoring a bullish bias on dollar. Gun in my head. If weekly have a bullish inefficiency still sign imbalance being respected and 4-hour displacement out of it, however, sorry, I'm slow right now. However, daily have a SIBI into the weekly would let me try to make sense of this question. If the weekly has a bullish gap being respected and the 4-hour displacement out of it, however, the daily has a SIBI into the weekly gap, would the bias be bullish or 50-50 condition since daily formed a SIBI? So that's a good question. It comes down to your preference. It comes down to how you want to approach things. You can wait for more confirmation through that daily gap. You can wait for us to start invalidating it. I'm a firm believer that when you're in alignment with the draw, the opposing, so if we know the draw's up here, obviously we don't know anything. We're operating off probabilities. But if I have a high conviction that the draw is up here and we trade into our level, this opposing gap right here should get ultimately invalidated and sliced through like butter. We might have a small reaction off of it initially, but we're going to trade into this premium array, right? That opposing PD array, to then trade into a discount array down here and then ultimately invalidate it. So I believe that when you have a strong sense of draw and liquidity and narrative, the opposing PD arrays become a bit more insignificant. Now that's, going to be more of an issue for people that don't understand draw well or aren't on side with the draw and liquidity as much, because you're going to get cooked. So it really comes down to the type of trader you want to be. If you want to demand more confirmation through those levels, I personally don't worry too much about opposing PD arrays, which is a hot take, but I still look for trapped order flow. I still expect trapped order flow and consolidation when we have 2 gaps, sandwiching essentially. But Opposing PD rays, when you're in alignment with the draw, are going to get sliced through and invalidated. That's what it comes down to. So if you're able to get on side with the current draw, and we're drawing to buy side up here, well, then the weekly gap that's resting right here is just going to get invalidated as we go higher. Now, we might have small reactions off of that, but that's all factored into my trading. So I don't know if that answered your question, but hopefully. Thanks, Cam. God bless for the hard work. Appreciate that, brother. Thank you. Thank you. I do not use new day opening gap or new week opening gap. What if we have the opposing PD arrays and market starts ranging? So a lot of times you're going to see that where we have a gap lower and we have a gap higher, and price just ranges. But this is trapped order flow right here. So this is something I factor in. And what you want to see here when we have trapped order flow is you want to wait for price to get out of this consolidation and create new gaps out of it to the upside or downside. So once we get this gap out, I'll trade that. But all right, let me keep going with my analysis. So monthly internal being invalidated, traded through as of right now, right? ES is clearly expanding through the internal. I mentioned to Academy members, to my students, that yes, at the time when we stung into this, we are in a key level area, right? The internal. This is a level where we could potentially reverse from. But I'm not just going to flip bearish because we're in a monthly internal. I need to see the daily order flow confirm that. I need to see the daily order flow flip for me to be bearish biased on indices. So I told them, as long as this daily order flow remains intact and bullish, I'm going to hold my bullish bias on indices. And what are we seeing? Continued expansion, continued bullish order flow through that monthly internal. So that is a very, very important distinction to understand, guys. I'm sure a lot of people saw the monthly internal and they immediately were bearish. Oh, monthly internal, bearish bias. No, there's more nuance to it than that, right? So because we have weekly bullish order flow now, daily bullish order flow, 4-hour bullish order flow, we're not just going to call tops in the market because we're at a key level. We need to see that order flow flip. We need to see that alignment. So the daily for me would have needed to flip bearish and validate that monthly internal. Because it hasn't, I've submitted and held my bullish bias. And what we're seeing is fall through to the upside. So until we stop printing respective discount arrays, you know, bullish for value gaps and order blocks and whatnot, I'm going to remain bullish on indices. And my draw will be towards this buy side up here. Because as of right now, we're failing to offer fair value in the monthly. So that opposing liquidity becomes my draw. So I tried to go really in depth there. Hopefully that was insightful. So I'm bullish on indices as well, long story short. Daily, respecting that first fair value gap up here. NAS is as well. I think ES has this 4-hour gap. Yeah, we're just kind of consolidating right now. We have the 4-hour gap down here. But we'll have to see how this week prints. Not much to say about indices other than that. I'm submitting to my bullish bias for as long as for as long as the daily remains bullish order flow. Kindly share the analysis of gold. Yep, I'll definitely do gold once I get there. How do you find the order flow? Do you have a video about it? I have a full video in my teaching, like for the Academy members. I don't have a full video on order flow on YouTube yet. That's a good idea though. I can definitely do that eventually. But right now I don't have a video on order flow yet. I have a video on market maker models. During your Sunday forecast, if you have a bearish bias for euro, however, during a week, euro seems to disrespect bearish return. Good question. So just because I'm bearish on something on Sunday doesn't mean throughout the week that can't change. Bias and draw is something that is constantly going to change based on the information that gets provided throughout the week. So I could be, it's hard for me to give an example without like just seeing it on the chart and pointing it out. But I could be, you know, I could be bearish euro going into the week. And then dollar just starts selling off. Like dollar starts going crazy. And we're like, okay, it's clearly bearish dollar. and euro starts respecting discount rates and flipping order flow and being bullish. And I'm like, okay, well, now I have a bullish bias on Tuesday based on the new information that's been provided. So I'm not just trading. For me is, I emphasize this all the time. It's not about being right. It's not about having like theses and feeling correct about them. And I'm very, very okay with being wrong, right? The market validates or invalidates the theses that I create, but I have no attachment to being right or wrong. So every week, I'm going to show my expectation based on what price action says on Sunday. But as new order flow, as new candlesticks print throughout the week, those things can change, and price either validates or invalidates what I'm looking for. And so I just flow with the market. So bullish indices. Obviously going to be the same thing on NAS as well. Invalidating the internal, never flipped on the daily, failure to offer fair value, seek opposing liquidity on the monthly, in my opinion, all-time high draw. Obviously, until we see any changes to delivery on the daily, order flow flip, whatever. We have this little volume imbalance gap thing right here. There isn't a body close through this. So I wouldn't even really mark this as a fair value gap because the second candle didn't expand. Right? There's no expansion on the second candle, but this is a volume imbalance. There's a little imbalance in price right here. S&P has that as well. So we'll see if we reach for that later. But right now, the daily order flow is still bullish. I have no reason to be bearish on the weekly right now. We could see some form of retracement here on the 4 hour. We are engineering these lows potentially, and then we have the gap on S&P. So wouldn't surprise me if we want to sting into that to potentially go higher. But I'm going to hold my bullish bias until that daily changes state of delivery. What confirmations do you like to see for changing order flow? I want to see price trade into my key levels, which are internal and external. So fair value gaps and swing points for one. And I want to see SMT. That's a good confirmation of a key level holding. And I want to see either a change in state of delivery or a fair value gap created. An order flow flip is what I call it. So it's order flow flipping with displacement. So bias is something you're going to get more and more familiar with the more chart time you get. The best advice I could give to anyone right now that's trying to learn how to trade, that's trying to be self-sufficient and just improve as a trader, is I need you to show up every single day in your allotted time window, wherever you're from. I know a lot of you guys are from different places around the world. Whatever session you can trade and show up and trade consistently every day, I want you to dedicate a period of time every day to showing up to that session and just watching order flow and watching the charts. You know, whether you're trading my model or not, you can study my model and trade that during the session. I want you to show up every day, lock in, view the price action, and look for a model and get familiar with how price books, because that's what's going to get you to my ability to flow with price action and create narrative and understand draw is purely because I've showed up to these charts every single day for like the last 5 years, bro. I've showed up to New York session every single day without fail throughout the week and just watched price action. It doesn't come from backtesting. You know, backtesting has its uses as well for spotting models and whatnot, but it doesn't come from that. That comes from the live data and just chart time. So in terms of knowing when you're switching bias too fast, the way to understand how you're switching bias too fast is if you're not. For me to switch bias, I need to see order flow change. I need to see price invalidate my areas. So let me give you an example, and then I want to keep going with the forecast. If I have a bullish bias on YM, let me give you an example here. Let's say I have a bullish bias on YM. Why do I have a bullish bias on YM? Because we're trading into the daily internal range liquidity, right? So if you don't understand internal and external, please go study that. That's the foundation of bias. Understanding daily candle closures and respective internal and external is what's going to give you bias and draw. I have a full video on it. Master draw and liquidity in 10 minutes. Please go watch that if you haven't. But I'm bullish bias because of this daily internal. I'm not going to teach what that is. You can go watch the video. Bullish bias from this gap to this high. That's my bias that I'm going to hold and maintain. Switching your bias too fast would be becoming bearish right here. Becoming bearish before you have the proper confirmation. We can still clearly see that price can respect the previous candle low in this internal range of liquidity, right? We have this area of fair value right here we wick into. So flipping your bias too fast for me this is an example of it. Becoming bearish in here when we still have that daily gap we can respect. We haven't disrespected this internal. We can easily still respect that. So that's an example of flipping bias too fast. It's hard for me to explain it other than to give examples like that. So now we traded into the external and we're respecting it. Really nice respect to the area for value there. So next, buy side liquidity is right up here on YM. Now we just traded into the daily external and we're respecting it on the daily. So we may want to see some type of pullback into this range to then continue higher. We do have this gap over here. I could see, like I said on ES, I could see price wanting to run these lows to then continue higher. Now that doesn't need to happen. We can just continue to expand, but I could very well see price running these lows to go higher on ES and YM. But we'll see what happens this week. I just saw the 12-month and fell in love with it. I mean, there's like 6 candles on here. Like the 12-month is cool, I guess, if it's going to give you conviction in what you're looking at, but it's not really tradable unless you want to hold trades for like an extremely long time. How many trades are you taking per week? It really depends on the week. Usually 2 to 4, 3 to 5 in that window. It really depends on the week. Sometimes I have less. Sometimes I have around 5. 5 is usually like my max. 2 to 4 is a good window, average, to kind of summarize my frequency. Usually just looking for 2 to 4 good setups a week. But I'm more focused on just showing up every day and making sure I do what I need to do. So that means doing my job as a trader. Showing up, spotting the model, managing my risk, having discipline, executing, keeping my psychology in check. It's all of those things. As long as I'm doing my job, I know the numbers are just going to work. I just show up every day and I make sure that my performance is where it needs to be. And I just detach from the numbers. Russell swept that external. Yeah, so price could definitely pull back here. We're in a consolidation on the daily on all these indices right now. So it could be sloppy Monday. Could see continued sustained consolidation here. Potentially a pullback. But I got to get cooking on this forecast. Been answering a lot of questions. I'll answer one more. When we have higher time frame context on the aligned time frame, what would you advise if we see a trail? Can you like send a picture in the Discord? I honestly don't understand what you mean. Where did I learn market maker models? I learned it from ICT. Just studying ICT. I went deep down the ICT rabbit hole, studied all his stuff, all the private mentorship, 2016 core content, 22 mentorship, all that stuff. I went through all of it when I was studying. And I like to believe that I got a really, really deep understanding of it, and then I simplified it because I realized that my brain was overwhelmed and I don't need all the things that I'm looking at. Order pairing is essentially, let's say that we have smart money, right? What does smart money want to do? Smart money wants to buy low and sell high. Smart money wants to sell high and buy back low for a profit. So order pairing is just a process of buying low and selling high. It's a process of pairing their orders with willing buyers and sellers on the other side of the curve. So they sell high right here. They're trying to pair their shorts down here so they can close those shorts for a profit. So this is why liquidity is so important to understand. My technical is perfect, but taking one loss on opening random trades, that's just pure psychology, brother. Pure psychology. I suggest you to go all in on fixing your psychology. Read Trading in the Zone. Read Daily Trading Coach by Brett Steenbarger. Binge psychology videos. That's purely psychology. That means you are tilting. Okay, so bullish bias on dollar. Gun to my head is what I'm thinking. Obviously, we'll need to see more confirmation and validation of that thesis throughout the week. I don't like how we're failing to expand off these internals. This is not a good signature for this respecting. I would favor lower Euro USD based on what I'm seeing from price action. Daily order flow bearish. Not much here to say. Consolidation. Staying away from majors until dollar begins to have some clarity and expand. So I'm really not interested in this right now. But if I had to pick a side for my bias, it would be bearish. But I'm staying away from euro and pound, and I'm staying away from majors until dollar is more clear and willing to expand. So I haven't been trading any euro and pound, really. All right, price is always targeting liquidity. They're always pairing their orders with willing buyers or sellers, depending on their position. Right? The markets are a no-sum game. You need someone on the other side of your orders. Same is true for institutions. You know, smart money. They have huge orders. But they're always constantly engineering liquidity. And they're pairing their orders. This is why people say the market's manipulated. Well, to an extent, it is. But with what we use, we can get on side of that. And it's just basically understanding order mitigation and order pairing. So this consolidation, this extended period of consolidation, just big red flag for me on majors. I'm not interested in euro and pound. Won't be trading them earlier in the week. I need to see dollar show expansion. I need to see dollar give me conviction in what euro and pound are doing. So until then, I wouldn't highly recommend staying away from majors, because when dollar's in that period of consolidation, you have a window of low probability trading conditions that you shouldn't be pushing risk in. You made sense and explained it perfectly. I love that. Can you write down the recommended? So Mark Douglas is obviously the GOAT. Brett Steenbarger is another really good psychology coach. I read both their books, great books on psychology. If you are taking losses and tilting, deviating from your process in any way, over leveraging, not managing risk, you're not disciplined, that is all psychology. That's all purely your trading psychology. So I'd go full in on fixing that if you already feel like you have the technicals and model in. Bro, can you do me a favor? Can you show me how you would have traded ES and QYM on 30th of April? An hour. I can do that for you in the Discord, like later. I can look at it if you want, but right now I got to get through this forecast. I can't I can't go and like back test right now live, because I literally need to do this forecast, you know? But if you want me to send you a video in the Discord, ping me in the, after this stream, ping me in the Discord and I'll send you a video of me looking through price action April 30th if you want. I'm fine doing that. But I've already been like answering a ton of questions. I'm like not even halfway through this yet. Daily consolidation. This is straight chop on Australian US dollar. Weekly straight chop. Yeah, I'm just zero interest in majors here, where they're at. Like I don't even really need to waste the brain points charting them up. Just straight chop. We have the weekly internal. Daily consolidation as well. No gaps being created in price action. That's usually your indication that you have a low probability phase in price, right? You have consolidation. Signatures of consolidation are price not falling through, right? A lack of fair value gaps. Price is just going to continuously run external range liquidity back and forth. This is a low probability trading condition for my model. Are there people that can trade chop and have scout models, whatever? Sure. But for my model, for how I trade, I know that this is conducive to a lower win rate. I don't position myself to trade that. So I'm just full out avoiding it. New Zealand, US dollar. Didn't tag this internal, which is interesting. Not following through from the weekly internal like we talked about. Majors not looking good for follow through from there. I'd be surprised if they did. Daily order flow is now bearish. Lack of fair value gap, so you have this small one here. Just terrible delivery on majors right now. Don't force it in these conditions. So when majors look like this, I go and I look at another asset class. In my opinion, that alone is an edge in itself because I'm positioning myself to trade things that are willing to move, that have higher probability market conditions for my model. That's a really important thing to understand. What do you do when you see the charts and see PD rays on different time frames? How do you choose what time frame in PD ray to use? I'm talking about higher time frame. I work my way down from the monthly all the way down. I understand fair value and I frame a narrative from the monthly all the way down to my entry time frame. Weekly internal tag, we're respecting it right now. That weekly candle is respecting it. Daily consolidation. Just straight chop. Majors are not it, guys. I'm going to tell you straight. Like, wait on dollar, wait for some clarity on majors because you're going to lose a lot of trades right now. If your model likes chop, then ignore what I'm saying. My model is not going to have a high win rate in consolidation. My model is built off framing trades with an expansion. Just literally going to skip majors. Now, this can change if dollar begins to expand. If dollar begins to expand, we have a clear draw on dollar, then you know that Euro, GBP, AUD, NZD are going to move inversely to that. CAD, Swiss franc, yen are going to move directly correlated to that. And so if dollar begins to expand, that can very quickly change throughout the week. But we'll have to see. We don't have a lot of USD news either. So we might literally just see continued expansion. We'll have to see. So my advice to you guys that have accounts, capital, whatever it may be, is protect your capital during these times. If you don't trade consolidation or your model has a low win rate in consolidation, you know now is not the time to push risk. Weekly internal tag, daily gaps, daily order flows flipping. Not interested in any of these majors. Euro and pound. Swept this external. Strong wick. Forex really ranges, so we're working back into this range after sweeping that external, that buy side. Disrespecting this gap. Sell side down here is what I'd be looking to target. Euro and pound. Euro pound, the cross looks more bearish to me. We do have this weekly gap being created. I'm looking at this to want to fail to offer fair value and seek this sell side down here based on what I'm seeing. Daily consolidation right now. Looks pretty bearish to me though. We do have a lot of low resistance liquidity up here, but what we could see is price run that into here. But you need to see the proper confirmation before you start looking long on euro pound. You need to see the order flow flip, right? I'm not just saying, hey, there's internal, price is going to go there. I need to see the 4-hour flip. I need to see price actually want to reach for this high here. We'll see if it wants to reach for this weekly gap or not. Right now, this is bearish order flow on the 4-hour. So the 4-hour would act as your compass to that. Right now, it's bearish. So that weekly internal right here is something to keep an eye on. Daily gap consolidating. Sell side target down here. We're sweeping this sell side target. Working back into the range. AUD, NZD, and Euro pound are just very I would never trade them. Like when I was trading Forex, I never traded them. They're good for correlation though and seeing what's stronger and weaker. Like if Euro pound is printing, if you see Euro pound printing with strength, you know Euro is stronger than pound. If AUD, NZD is printing with strength, you know Australian dollar is stronger than New Zealand dollar because it's a base currency. Right? Every pair has a base currency and a quote currency. Weekly internal being tagged. This is interesting. That's not bad. I don't like how we just swept this monthly external on the sell side. But if you get the proper confirmation for shorts, this is a good signature to see as well. These failure swings with low resistance liquidity down here. So if we get into flip here and follow through, could be shorts on Australian dollar, New Zealand dollar. We'll have to see. It could be decent. Trading into that internal. We'll see if that follows through throughout the week. If you're trading that, that's something to keep an eye on. Yes, sir, definitely. I got you, bro. Yeah, ping me in the Discord and just send that and I'll do it. What's up, bro? Gotta say, you really help me with your content. I don't think you know how impactful you are. Keep it up. Bro, I appreciate that. Those are the best comments. Thank you, bro. I'm like, I love doing this. I'm happy to help. If you have any questions, ping me in the Discord. I'm always in there, happy to help. Higher time frame rules. Go with what they're saying. Right. The higher time frame is the leader. The higher time frame takes the highest precedence, right? Monthly takes higher precedence over weekly, weekly over daily, so on and so forth. So understanding fair value from the top down is at the core of everything I do. Understanding the monthly, and then understanding the weekly in context of the monthly, the daily in context of the weekly, and then understanding fair value and liquidity. So IRL and ERL. Sweeping this sell side on crude oil. I don't like crude oil. You guys hear me diss crude oil every week. I don't like how it delivers. We're closing above this small little internal gap. This would never be something I would look to frame shorts off of. And the reason for that is we just swept that major sell side objective and we have so much strength on this third candle. These are not the type of internal range liquidities you're looking to trade. Right? This is a nuance. I had to trade with my model on Friday. And I literally told them live, I said, I'm not taking this because of this third candle and how we just swept that liquidity. So that is a nuance. That is something that I've learned just through chart time, expecting that setup to fail. That's a lower probability. So I'll just ultimately pass on that. So the daily internal is holding now. This could continue to reach higher. Let's see. There's buy side objectives up here. I would actually be looking at this external right here, external, and then this next buy side objective looks bullish. So the order flow flip bullish, internals respecting, bullish crude oil, bullish bias on crude oil. If you trade that, looks good. What are your thoughts on meme coins? I don't really pay attention to crypto like that. I believe in Bitcoin fundamentally long term, but like I don't trade crypto at all. I'm sure it works though. It's candlesticks. Everything will work in, like everything that I use would work in crypto. But I feel like Bitcoin goes through periods of extended consolidation, which like I just went on a rant about. I know that consolidation's going to equal a lower win rate for my model. So I'm not going to trade an asset class that I know is consolidating a lot, you know? These things matter. They're really important stuff. Right? I want to trade asset classes that are frequently expanding or that frequently have volatility within a session. ES and NASDAQ every day at 9:30 has that volatility injection. And they tend to expand and go up on the higher time frame. Look at the monthly on ES and NQ. Check this out. Now, Bitcoin's been doing something similar, but I believe that Bitcoin goes through long periods of consolidation. All right, I want to trade stuff like this that's willing to expand. Versus Bitcoin. Yeah, Bitcoin's been printing in the long term, but look at this. April 23rd until May 6th. And then look at all this. It just goes through these periods of straight chops, so that's not something I'm really looking to trade with my model. All right, gold. Whoever asked for gold, we're here. We're finally here. No gaps here that I see. OB all the way down here. weekly, we called this bearish draw. We talked about it, guys, right? We talked about a bearish gold last week, tagged our internal, and we're respecting it. If gold starts to print higher prices on the 4-hour, well, this candle is respecting the internal in the order block. It would be a good sign for higher prices. These two buy side liquidity objectives would be my draw. Want to see the daily and 4-hour begin to print bullish price action now, higher. You want to see the 4-hour hold this low. This is a really strong bearish retracement. Not an ideal retracement, but now we want to we want to see this hold now. Right? We've dug deep into this leg. If it's going to go higher, it needs to do so from here. Not the most ideal retracement, but right now it's being respected by price. So want to see this fall through to the upside. Could be really nice on gold. Actually, I like that. Could be really nice bullish bias on gold. Bias side of the curve now, right? So eyes on that going into this week. But we know that there's not a lot of news. We know that this week could be lethargic. So looking at a bullish bias on gold, I need to see that expansion phase of price. So I need to see price actually want to move. Otherwise, I'll just sit out. If price is straight chop, if I know a session is going to be straight chop and I can't see anything in it, I'm not going to try to trade it. This is where discipline comes in. This is where knowing your model, having a deep relationship with your model in the market conditions comes in. This is straight chop on silver. It looks terrible. No gaps. Gold has been printing a lot better. Prefer gold longs. Just not going to mess with silver. I do use it for correlation though. How do you unlock permissions on the Discord? You have to click that thing. Here, let me share my screen. You have to click this. Unlock server, and you have to put this reaction. So if you can't see the server right now, like you should be able to, you won't get access to the Academy of the Live Trading because that's obviously for my students, but I have a full section of the server that's completely free. I do daily education. I have my free course. I have PDF access, library, resources. I do free analysis. So that's all the section of the Discord you can get access to. So you just literally click this unlock server right here, and then you react with the verification, and then it should open up the entire free section of the server. Let me see. On the gold 4-hour chart, which fair value gap would you go long on since there's a trail of fair value gaps? Right, that's where understanding fair value comes in. If I was taking a long, I would have just taken it off this one and put my stop below the low if I was swinging. But I really don't, obviously this is hindsight seeing the retracement, but I didn't like this retracement at all at the time. If I was swinging, I would have took it right here on this first gap, on the sting, and I would have wanted to see this just sting and go. I don't like this retracement, and my stop would be obviously below the swing low. I always talk about my stop losses always either go below this swing low, the protected swing right here. This is usually going to be an SMT low, or that goes right at the body of that same swing low. So if you want to get cute with it, you could use the body, and then I target 2R. This is a swing. I would take that gap, cover the swing low or the bodies of the swing low. Silver, we talked about. Bitcoin, we can look at monthly internal to external playing on Bitcoin printing lately. Weekly gap. Could want to offer fair value on the weekly towards this level here. Use the 4-hour as a compass. If the 4-hour order flow flips bearish, right? So if the 4-hour order flow flips bearish and validates this bearish bias towards the weekly gap, we're going to look to target it. We're going to look for the weekly to offer fair value. Now, this weekly can also obviously breakaway gap if we just expanded, but if we get that 4-hour change in state of delivery and bearish order flow, I'd be looking for a bearish bias, right? A weekly to offer fair value. Once we trade into that weekly level, then we will look for sustained higher prices, right? Bullish. We then have a bullish bias from weekly internal to external. So from here to there. So we'll see what happens if we just continue to expand higher and the order flow doesn't flip, then you're not going to look to target this gap. But if the 4-hour flips bearish and we begin reaching lower, we target this weekly. So that's exactly what I mean by my biases are ever changing. It depends on the order flow throughout the week. It depends on what price is saying. I create theses based on what I'm seeing, and then price validates it and invalidates it. I don't care about being right or wrong. I don't care about like holding a bias from Sunday that I create. Price just confirms or denies what I'm expecting, and then I just flow with it. That's it. Ethereum traded into this monthly level. It's wicking and respecting it, but I'm still bullish Bitcoin. So we may end up invalidating that just based on the strength of Bitcoin. We also have this weekly internal that we want to tag into most likely. So what we could see is a retracement into the weekly, just like we said on Bitcoin. But we need to see the 4-hour flip, which this looks like it's very bearish. This should definitely tag the weekly, in my opinion, on Ethereum. So I'd be looking for this to reach into the weekly gap before heading higher. Looks bearish. And then once we tag into this level here, we can have a bullish bias from internal to external. We'll see if Bitcoin wants to do that as well. But just to kind of recap, waiting on dollar, need to see dollar clear up. Need to see dollar want to expand. I'm going to my head bullish bias on dollar. Bearish bonds. You can see the difference in how bonds is printing. We're not consolidating. We're respecting fair value gaps. We're expanding. That's what you're looking for in price action. That's what you're looking for on the assets that you're trading. So bearish bias on bonds. Bullish bias going to my head on dollar. Still don't like the phase it's in. Consolidating. Bullish indices. Bullish crude oil and metals. We'll see, because metals usually is going to trade inversely. But yeah, pretty much what I'm seeing. For Einstein, if you want me to look at April 30th, ping me in the Discord. I'll send you like a video or something. But yeah, if you guys want to check out the Academy, I offer a 7-day free trial to live trade with me. I'll be live trading throughout the week. The link's right at the bottom left, tradingpatiently.com. Go check that out. And if you want to learn some stuff or just live trade with me for free for a week, it's a no-brainer. Like, if you don't want to continue with it, just cancel. And yeah, you just live trade with me for free for a week. So I don't know why you wouldn't. But yeah, I think that's pretty much it. Hopefully there was some value in the stream. I feel like every week we drop some good gems. So for those of you that tune in, good stuff. Very invested in your guys' growth. Pop into the Discord whenever and ping me, tag me, ask me questions, show me your winning trades, show me your losing trades, whatever. But yeah, I hope you guys have a good rest of your day. Peace out, guys. God bless. Enjoy the rest of your days.